Hello, and welcome back to the 6th Growth Portfolio Update. Today, I'm going to be talking about Meta and why the stock is down in the short term, but I'm not worried about it. So, over the past 5 days, you can see that Meta has traded down almost 12%, and that mostly happened during the earnings. Now, the earnings were actually really good. They beat on the EPS estimates and the revenue, but the stock traded down a lot, and that was mainly because Mark Zuckerberg talked a lot about how Meta is losing money and they're investing in stuff like the metaverse that people don't think is going to pay off at the end of the day. And I think those concerns are somewhat valid in that they are losing a lot of money, and that is not the best thing. But I think a different way of looking at it is Meta is making just a ton of money. I mean, that's why they instituted the dividend, is because they probably just have so much money where they can't even use it efficiently, and they might not even be able to do as many share buybacks as they possibly can, so they just have to get rid of their money through the dividend, and they're trying to look for places to spend it because of how much money they're making. And we've already seen this play out before, and I wasn't worried about it 2 years ago when Meta was inefficiently using their money on the metaverse, because I saw that the fundamentals and the company were all going in the right direction, and they were generating a ton of income, and it was just growing, and their revenue was really strong. And even though they were wasting money, it just sort of doesn't matter because the company is still growing and doing really well, so they have the money to kind of waste. I mean, if you think about it, there's a lot of companies that pay out big dividends. I'm not going to go through all of them, but any company that pays a hefty dividend, that's basically just the company in a way wasting the money. They're not spending it on their actual company, they're just kind of giving it back to the shareholders. And the shareholders can reinvest that money into the company, and that will kind of help bolster the share price. So in a way, it kind of helps the company, but it's kind of just giving away companies' money, and it's tax efficient, so that's why companies do it. But it's sort of the same thing, and Meta is just kind of throwing money at random things and hoping that something will stick. And so far, it hasn't really worked out for them. The metaverse isn't that good, and AI might take a while to actually start generating revenue for them. But at least they're spending the money on things that might make the company better in the future. And also, they are continuing to grow as a company and continuing to generate more free cash flow and revenue. So even though their money usage isn't that efficient, at least the company is growing in the right direction. So here's a look at the EPS for Meta. And the most recent quarter, it did have a little bit of a quarterly drawback. But as you can see from just the trailing 12 months, this is insane EPS growth. And it's just ramping up incredibly over the past year or so. And just in general, you can zoom out further and see how that there are some declines, in 2022. It did go down, but just in general, it's trending upwards very quickly. And yeah, the most recent quarter was really good. Maybe a little bit of a step back from the last quarter, but still incredibly strong EPS. And if we also go and look at the revenue, you can see that this most recent quarter, again, a little bit of a step back, but you can just see how it's trending in the right direction. And year over year, it's 27% revenue growth, which is absolutely insane. So I see a company that's moving definitely in the right direction, and you can just see how much they're growing their revenue. And even if they're wasting money in certain areas, I don't see that as a huge concern. Like we already kind of saw this play out like 2 years ago, as I mentioned earlier, and it did affect the share price, but the company itself was fine during that time, and it continued to grow, and then the share price recovered. So I see something similar happening here. I don't think it will probably go down as much, because I don't think people will treat Meta the same way they did 2 years ago, where they basically just sold it as if it was never going to recover. But personally, I'm taking advantage of this dip in Meta because I feel a lot of deja vu hearing Mark Zuckerberg talk about the metaverse, and I think that if anything, maybe Meta spends a little bit too much money for a year, and then they notice, oh, we might be spending too much on the metaverse, and they do cutbacks again, and the share price just recovers. So I don't see any sort of actual threat to the company or really negative things whatsoever with the whole earnings report. I thought it was really good. Just the actual fundamentals with the revenue and the EPS was better than expected, and it's all moving in the right direction. So personally, I thought the earnings was really good, even though it traded down. So yeah, that's why I am not concerned about the share price going down, and why I am using it as an opportunity to start buying into Meta again, because I felt like Meta was really overvalued, and it still is, definitely, but now is like a little bit more of a better opportunity to get the shares at a slightly lower price. Well, that's kind of my take on the whole Meta earnings and it trading down. And now let's go to a quick update on the portfolio. So here is the growth portfolio. I've kind of taken a little bit of a break from buying in heavily. I've kind of gotten the portfolio to a size where I really like it at the portfolio's current size, and I've kind of taken a step back from buying in as much because I felt like stocks had traded up a lot. But now we're kind of getting to the point where things are starting to come down a little, especially some of the stocks that I like. So I will probably continue to add a little bit more money and bolster the portfolio a little bit more in the future, and just hope that stocks continue to trade down more so that I can take advantage of that and buy some of the stocks I'm looking at. So here's the worst performer to best performer, and Tesla is still claiming this spot at the bottom of the portfolio, but actually it kind of traded up a lot in the very recent short term, so it's not down as much as it was for me, which is nice. And yeah, I'm just sort of waiting for Tesla to recover, and I think it will eventually, but it is one of the riskier holdings in my portfolio. Meta, even with the trade down, still is on top of the portfolio in terms of growth and in terms of just value in the portfolio. So that's the update there. We're at around 40,500, which is a little bit less. I think we've lost about $2,000 from the last portfolio update about a month ago, but that's kind of because the entire market has kind of taken a step back, and especially the higher volatility like tech side of things. Okay, now let's take a look at the performance. Okay, so let's take a look at the performance over the last month. As you can see, it was about a loss of $2,000 in the account. I didn't contribute much because I was sort of thinking stocks were probably too high, and I was kind of taking a break from that and waiting for an opportunity like this to potentially start buying in again. Percentage-wise, we were down 4.83% over the last month, which honestly isn't that bad compared to when stocks fell a lot like 2 years ago. This isn't really that bad, and hopefully it continues to trade down more so that stocks can get down to more attractive valuations. But let's compare this to the different indices and see how they also fared in this last month. So we'll start with the Russell 2000. The Russell 2000, it looks like performed slightly worse than us at 5.26% loss over the last month. The Dow Jones performed better. That's kind of to be expected, since Dow Jones, I feel like, has less volatility and tends to do better in bear market situations and times when the market's going down. So they only lost 3.74% for the Dow Jones. NASDAQ, again, this is really similar to our portfolio, and it looks like it's basically the same, 4.83 to 4.8%. So yeah, slightly better, but basically identical in terms of performance. And the big one, the S&P, definitely outperformed us a little bit. The S&P only went down 2.76%. So the S&P definitely made up a little bit of ground on us, which is not the best, but it's kind of to be expected when we go through sort of times of decline in the market. We're more expected to outperform during like the bull markets and times of like heavy growth. So this kind of is honestly in line with my expectations. If we take a zoomed out look, this is what the entire portfolio looks like versus the S&P over its entire timeline from when I started it in May of 2022. And you can see that we definitely went through some times of losing to the S&P, and we were kind of like above it, but also kind of in line with it for a while. And then we kind of took off when the market started to recover, and that's when tech really did a good job recovering, and that's when we kind of separated. But it is closing the gap a little bit during these like falls in the market. So hopefully we are able to continue outperforming, and yeah, I'll see you guys next time for the next update. Thank you. Bye.